My name is Andrew. I'm a data scientist here in Silicon Valley, and are we looking at some buy signals for our coming Monday? You guys have to watch this video to the very end. Look at that meatball, looking at the like button directly underneath the video and slapping it. All the way up to 1200. Comment out which one you are. Let's go right into it. First things first, you'll have a AMC buy signal bubbling up. We're currently trying to see where AMC is going to find some critical support. We are also going to take a look at whether or not AMC and GME are fundamentally chart action and fund ownership in a buy and bullish mood. We're also going to look at the options chain, and we're going to take a look at Ortex. And as always, we're going to give you a little research for your day. So look at the timestamps down below. I want you guys to understand that this is your time. Make sure that you guys understand that investing is a successful, very successful endeavor for a lot of people, but it should also be pleasurable. Identify, incubate, and invest. Those are the 3 I's of small cap success in the 2020s. And entirely different than how your father and your grandfather discovered startup diamonds in the rough. Consider the moonshots that environmentally minded investments have made in the past several years. Whether it's Beyond Meat stock or the Tattooed Chef, the revenues have come rolling in and the share prices have moved in tandem. There are some fast-moving startups classified in the ESG category, environmental, social, and governance. Millennials who control vast amounts of capital now are known for their values driven in the consumer preferences, and they love to invest in this strategy as well. As millennials contributed $51 billion to sustainable funds in 2020. This is borne out in the data. About 1/3 of millennials often or exclusively use investments that take ESG factors into account, while a report of Morningstar found that 72% of the US population expressed at least a moderate interest in sustainable investing. Furthermore, millennials are set to inherit approximately $30 trillion over the next few decades, according to a report from MSCI Inc. Consider the potential growth trajectory of a diversified company in the ESG space, one with multiple high-conviction businesses to its name. So, we're looking at not just in theory, but in action. Here's a startup called Billy Goat Brands. BGTTF is building from the ground up what might soon be the Berkshire Hathaway of ESG umbrella companies. Let's talk about the advantages in this business model. There's no need to develop multiple businesses from scratch when a holding company like Billy Goat can handpick the best ones and develop their potential. It's called synergy. The whole is much greater than the sum of the component businesses, as Billy Goat Brands' managerial skills create added value for all of its stakeholders. Billy Goat Brands, which launched its IPO not long ago, still called the Ground Floor Opportunity, is the parent company to Fun Guys Beverages, Sophie's Kitchen, and The Vegetarian Butcher, 100%, 46%, and 12% stake respectively. First, there's Fun Guys Beverages, a leading distributor of organic chaga and lion's mane mushroom-infused cold brew coffee under its KOLD Cold brand. Focused on moving from single to reusable packaging, they formed a bottling partnership with TerraCycles Loop to provide specifically ESG-centered packaging and distribution. Then we have Sophie's Kitchen, you guys probably heard of it, plant-based seafood brand that offers a large selection of frozen and shelf-stable plant-based alternatives for vegans and non-vegans alike. All of these seafood products are soy-free, gluten-free, non-GMO, and their retail partners include Walmart, Sprout, Amazon, Walgreens, and Stop and Shop. Last but certainly not least is The Vegetarian Butcher. It's an originally brick-and-mortar-based protein retail grocer concept that has currently had 2 operations locations in Kelowna and Vancouver, Canada. Both stores generating positive cash flow within 2 months of opening. Plus, The Vegetarian Butcher has launched a platform of e-commerce business to include mail order and delivery, and has plans to open 5 locations by the end of 2021 around British Columbia and 36 locations over the next 3 years. With the plant-based market reaching $74 billion by 2027, plus the millennial consumers and investors, well, they'll have plenty of capital to spend. All 3 of these ESG-compliant companies are poised for breakthrough moments as consumers shift toward vegan diets. Impressively, these brands have already gained significant press coverage. For instance, The Vegetarian Butcher was recently featured on the Daily Hive, while Sophie's Kitchen was seen on Goop.com. Even spotted Billy Goat Brands on Business Examiner, Vancouver Island edition, not long ago. Clearly, there's been some buzz surrounding the millennial money flowing into ESG culinary markets, and Billy Goat Brands, like Berkshire Hathaway half a century ago, has tremendous potential for expansion. So if you guys want to be able to check out this stock, do your own research, thank them for this being the sponsor of the video. And now let's go straight into what we want to talk about with the short interest. Take a note that we are looking at shares short about 104.49 million as of the release date March 24th, settlement date March 15th. We're still having such a gap in the amount of data that we have to understand AMC and GME respectively. We also have to pull up the GME data here. I'm going to start going through and just explaining the bare bones of what happened with the stock split. All publicly traded companies have a set number of shares that are outstanding. A stock split is a decision by a company's board of directors to increase the number of shares outstanding by issuing more shares to current shareholders. Essentially, it's just slicing your shares, the shares that you already have. For example, for a 2-for-1 stock split, a shareholder receives an additional share for each share held. So if a company had 10 million shares outstanding before the split, it will have 20 million shares, and you would have 2 for every 1 share that you already have. Now, what does that do for the price? After a split, the stock price will be reduced because the number of shares outstanding has increased. You can't just make free money, right? But in the case of a 2-for-1, the share price will be halved. Thus, while a stock split increases the number of outstanding shares and proportionally lowers the share price, doesn't do anything for you as a shareholder, the company's market cap should remain unchanged. However, here's some key takeaways. A stock split is a corporate action in which a company increases the number of its outstanding shares by issuing more shares to current shareholders. Stock splits can improve trading liquidity, making the stock seem more affordable, right? Between AMC and GME, which one seems more affordable? In a stock split, the number of outstanding shares increases and price per share decreases proportionally, while the market cap and the value of the company do not change. For the most, split ratios are 2-for-1 and 3-for-1, which means the stockholder will have 2 or 3 shares respectively. And reverse stock splits are when a company reduces the number of shares outstanding, thereby raising the market price of each share. There are a lot of different market forces to do any of these actions. However, it must mean that GME is in a very, very comfortable position with its stock price and says, you know what, we can have it, and people are going to just raise it right back up, and you'll have double the money. So that is a bullish move, and obviously GameStop has been seeing some massive gains. No stop. Take a look at the negative 0.8% short interest on GameStop. That lands it down underneath 20% short, which means that now, still very, very short, still very burdened with those FTDs, GameStop is now looking at the shorts taking massive action somehow, because you don't just go down 10% short interest in a single day. Very, very careful to pay attention to, because on Monday and Tuesday, we'll see the effects of those shorts. And obviously, since the price action of GameStop has only decreased twice, right in the beginning of the day, each day for the last few trading days, you will have noticed that these are likely where those shorts have been going. But to no avail, GameStop still raises the bar and manages to find some support after all. All right, really quick, let's go through AMC. Given the extraordinary gains to the late May of 2021, it's time to take the remaining profits off the table. After all, the May 2021 rally displayed elements of a climax run. So, is it a buy now? This story examines fundamentals, technical, ownership factors to understand the company. If the Leewood company with 1,004 theaters, 11,000 screens, scores a better probability of making more money for stock traders. In early February, AMC posted Q4 revenue of $1 billion, up 620% versus a year earlier, an adjusted net loss of 11 cents a share. The top line beat a Yahoo Finance consensus estimate of $1 billion and a net loss of 26 cents. Blockbuster Spider-Man No Way Home boosted ticket revenues and noted bookings for an upcoming flick, The Batman, in its initial week as very strong. We already know what the details on about The Batman and the Spider-Man No Way Home. It was monumentous ways that the apes were able to contribute and give back to the community that gave it so many attendees. Keep in mind, blockbuster movies don't necessarily lead to equally sizable windfall, but this time they did. Robert Mark, the author of Marketing to Moviegoers, told IBD that profit excess from ticket sales of blockbuster movies goes disproportionately to Hollywood distributors. And that's true. But CEO Adam Aron noted the company expects to launch a food delivery service with Uber as a partner as early as the second quarter, as well as a launch of AMC branded credit card later this year. AMC will also be accepting Shiba Inu Dogecoin as payment for its coming weeks. If you guys are interested in whether or not these mainstream articles are trying to spread FUD, or whether or not they're actually going to give a serious buy or sell signal, then comment down below that that's what you're looking for. Comment down below that you guys are excited for reaching the end of the video, and I want you to thank each and every one of you for jumping in and contributing to the channel. Thank you guys for spreading the join button. Thanks you guys for spreading the Patreon link. And finally, thank you guys for spreading that link down in the description that gets you 20% off of Lux algorithm, which gives you those buys and sell signals, because we're looking at some pretty big buys coming in the future. Thank you guys, and we'll see you in the money. Have a great Sunday. Peace.